It was a struggling video game retailer, seemingly left behind in a digital world. Then out of nowhere, it became the epicenter of a financial revolution. How did a company like GameStop, known for its brick-and-mortar stores, become a battleground for Wall Street? Join us as we uncover the wild, unpredictable journey of GameStop, the stock that defied all expectations and became a global phenomenon. But how did all this begin? GameStop's journey began in 1984, marking the inception of what would become a seminal entity in the video game retail industry. Initially founded as Babbage's in Dallas, Texas, the store was named after Charles Babbage, the 19th century mathematician and inventor known for conceptualizing the first mechanical computer. This naming was symbolic of the company's aspiration to be at the forefront of technology and software retailing, an ambition that would shape its early years and beyond. The early 1980s represented a golden era for personal computing, with rapid technological advancements and increasing interest in home computers. Sensing an opportunity, the founders of Babbage's aimed to capitalize on the burgeoning market for computer software. Their stores specialized in selling software, particularly video games, which were gaining widespread popularity thanks to the rise of gaming consoles like the Nintendo Entertainment System. Babbage's positioned itself as a premier destination for both software enthusiasts and casual computer users, offering a wide array of products that catered to a tech-savvy audience. As Babbage's grew, it adapted to the evolving market dynamics of the video game industry. The late 1980s saw the company expanding its reach, opening multiple locations across the United States. This expansion was propelled by the increasing demand for video games, which had begun to cement themselves as a staple of entertainment. Babbage's built its reputation on a foundation of extensive product offerings and knowledgeable staff, qualities that appealed to both hardcore gamers and novices alike. The expansion strategy included going public in 1988, which provided Babbage's with necessary capital to fuel its growth ambitions. The influx of investment allowed the company to innovate in its merchandising techniques and store layout, setting a standard for video game retailing that combined accessibility with a broad selection. The growth trajectory of Babbage's took a significant turn in 1994 when it merged with Software ETC, another retailer that specialized in video games. This merger was strategic, combining the strengths of both companies to better compete in a rapidly growing market. It also expanded the geographical footprint of the company, making it a national contender in the retail space. By 1996, the potential of Babbage's had attracted the attention of larger corporations, leading to its acquisition by Barnes & Noble for $215 million. Under the umbrella of Barnes & Noble, Babbage's was merged with Funko, a company that operated Funko Land stores specializing in used video games. This merger not only diversified Babbage's product offerings, but also introduced new business models, such as the trade-in concept, which became a significant aspect of its business strategy. In 1999, in an effort to unify its brand and solidify its identity in the marketplace, Babbage's was rebranded to GameStop. This rebranding marked the culmination of a decade of expansion and strategic transformations, setting the stage for the next phase of growth as a unified entity under the GameStop name. The turn of the millennium also saw GameStop embracing online retail, launching its first e-commerce site, which allowed it to reach a broader audience and adapt to the preferences of a new generation of gamers. Throughout the late 2000s and 2010s, the video game industry saw a significant shift towards digital distribution. This change was driven by the convenience of downloading games directly to consoles and PCs, reducing the need for physical copies. As a retailer primarily known as selling physical game discs and cartridges, GameStop faced existential threats to its core business model. In response, GameStop began to emphasize the sale of digital game codes and explored other digital products. The company also increased its focus on selling secondhand games and consoles, which provided high margin revenue. These used products became a staple of GameStop's offering, appealing to budget-conscious gamers and collectors alike. Recognizing the need to reduce its dependency on game sales, GameStop ventured into new product lines. This included an expanded focus on gaming-related merchandise, such as apparel, accessories, and collectibles. In 2015, the company acquired ThinkGeek, a retailer known for its pop culture and geek-themed merchandise, further bolstering its capabilities in this niche. GameStop also experimented with technology brands, opening stores that specialized in consumer electronics and wireless services. These stores, branded as Simply Mac and Spring Mobile, were part of GameStop's strategy to enter different markets. However, these ventures were met with mixed results, and by 2019, GameStop decided to exit these businesses, selling the Spring Mobile business in 2018 and winding down Simply Mac locations. Leadership changes were frequent as GameStop sought to redefine its strategy. In 2017, Paul Raines, the CEO who had been steering the diversification strategy, stepped down due to health issues and sadly passed away in 2018. His departure led to a series of short-term leadership changes, with the company struggling to find a stable executive team to lead a successful turnaround. In 2019, George Sherman took over as CEO, with a mandate to streamline operations and stabilize the company. Under Sherman, GameStop launched a cost-cutting initiative and a plan to close underperforming stores. The focus was on optimizing the core gaming business, enhancing the in-store experience, and growing digital offerings. In 2020, GameStop became the target of investor interest from Ryan Cohen, co-founder of Chewy, who acquired a significant stake in the company. Cohen pushed for GameStop to move away from its physical retail model and focus more on digital transformation. His involvement would later play a crucial role in steering the company's strategy towards e-commerce and eventually lead to his appointment as the chairman of the board. This leads us to ask the question, so how did this company become a stock market meme? In 2021, GameStop, a struggling video game retailer, unexpectedly found itself at the epicenter of a historic stock market event known as a short squeeze. This phenomenon, primarily orchestrated by retail investors, significantly impacted financial markets and highlighted the growing influence of social media on stock trading. By late 2020, GameStop, or GME, had become one of the most heavily shorted stocks on the market. Hedge funds like Melvin Capital had placed large bets against GameStop, anticipating that its stock price would continue to decline due to the company's outdated business model and financial struggles. The rise of digital game distribution was perceived as the death knell for GameStop's brick-and-mortar stores, leading to the bearish outlook from institutional investors. The story took a pivotal turn with the involvement of Keith Gill, a financial analyst known on Reddit as Deep King Value and on YouTube as Roaring Kitty. Gill began investing in GameStop in 2019, believing the stock was significantly undervalued. He regularly posted updates about his investment on Reddit community Wall Street Bets, providing detailed analysis and maintaining a bullish stance even when the stock's performance was poor. His conviction and transparency garnered a substantial following on the forum. In January 2021, GameStop announced several strategic changes aimed at revitalizing the company. The most notable was the addition of Ryan Cohen, co-founder of Chewy, to GameStop's board of directors. Cohen's vision for transforming GameStop into a major e-commerce player injected new optimism into the stock. This announcement acted as a catalyst, boosting investor confidence and sparking renewed interest in GameStop shares. The r/Wall Street Bets community, which had grown to millions of members, saw an opportunity not only to profit but to also challenge the dominance of institutional investors. The forum coordinated a mass buying effort to drive up GameStop's stock price, initiating a short squeeze. As the stock price surged, hedge funds that had shorted GameStop were forced to buy shares at increasingly higher prices to cover their positions, further driving up the price. This feedback loop caused the stock to skyrocket from under $20 per share to an intraday high of $483 in late January of 2021. The GameStop short squeeze had far-reaching implications. Hedge funds like Melvin Capital suffered substantial losses, and the event led to a broader debate about market manipulation, the power dynamics between retail and institutional investors, and the role of social media in finance. It also triggered a wave of regulatory scrutiny and discussions about the fairness and transparency of the stock market. For many retail investors, the GameStop phenomenon was more than a financial play. It was a form of protest against Wall Street elites and a way to stick it to the man. This populist sentiment was reflected in numerous posts on Our Wall Street Bets, where members expressed a desire to level the playing field and highlight perceived injustices in the financial system. Following the short squeeze in January of 2021, GameStop experienced a second significant surge in its stock price later that year. This phenomenon, while less dramatic than the first, highlighted the ongoing volatility and investor interest in the company, driven by a mix of retail enthusiasm, strategic corporate changes, and lingering high short interests. In May of 2024, GameStop once again captured the attention of retail investors, reminiscent of the 2021 meme stock frenzy. This recent surge in GameStop's share price, along with other meme stocks like AMC Entertainment, was primarily driven by social media activity, particularly posts from Keith Gill, famously known as Roaring Kitty. After a 3-year absence from social media, Gill posted a series of cryptic messages on the platform X, sparking renewed interest and enthusiasm among retail investors. Keith Gill played a pivotal role in the 2021 GameStop rally through his detailed analysis and bullish stance on the stock, shared via YouTube and Reddit. His recent reappearance on social media, marked by a sketch of a man leaning forward in a chair, a meme indicating serious developments, reignited the fervor among retail traders. This was enough to drive a significant rally in GameStop's stock, which saw an increase of over 139% within a few days. From Friday to Tuesday afternoon, GameStop's market value soared, adding more than $9 billion. AMC Entertainment experienced a similar surge, climbing to over 130% in the same period. These rallies were reminiscent of the January 2021 gains, driven by retail investor enthusiasm and the highly shorted nature of these stocks. Data from JP Morgan indicated that GameStop and AMC were the two most traded stocks by retail investors on the preceding Monday. Unlike the 2021 surge, the current environment is marked by higher U.S. interest rates and a stock market whose gains are concentrated in a few large-cap companies. Many fund managers are now cautiously awaiting further commentary from Gill. Additionally, the closure of Round Hill Investments' exchange-traded fund tracking meme stocks last year signaled a shift in the popularity of pandemic-era trading strategies. Meme stocks refer to shares that gain popularity through social media and online forums, driven by retail investors rather than traditional financial fundamentals. The phenomenon first gained prominence in 2021 during the COVID-19 pandemic, when increased savings, stimulus measures, and low interest rates pushed more people into the stock market. The rise of zero-fee trading apps further democratized access to stock trading, enabling more individuals to participate. The renewed interest in meme stocks was limited to GameStop and AMC. Other heavily shorted stocks, such as SunPower Corp, Koss Corp, and Tupperware brands also saw significant gains. Retail market orders as a percentage of total market volume increased noticeably, reflecting the intensified trading activity by individual investors.